Hello viewers, we'll be going over gold miners, ETF ticker symbol GDXJ. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, going over the current trend and the trend in the past. We'll be comparing the two, and we'll go over the day-by-day forecast for gold miners. So let's start off with the technical analysis. Today we're up 2.7% on the 1 hour chart. We have now reached to overbought RSI. If we expand that further onto the 4 hour chart, we also see the same case. We are now overbought on the RSI. As for the daily chart, we have not, or if we expand that to the daily chart, we have not reached to the overbought RSI yet. And on a positive note, to the F side, we have now seen a convergence on the daily MACD, and we also see a convergence, the 9-day moving average onto the 18-day moving average, the blue and purple line respectively. So the next possible resistance that I see is where we made off back in May 20th. Is not far from where we're currently at. That price level is roughly around $50.20. Most likely we'll hit that level soon. And as for support, if we do manage to reverse and head down lower, the next possible support will be around the 50-day moving average, as well as the 18-day moving average at around the price of $44.85. And we also see that level or range acting as previous support. And now let's head back to the day-by-day probability model. And again, these models are now available in the link below, so do check it out. So we only have found 2 models and the sample size is small, so this is not statistically significant, so do keep that in mind. As we progress to the 7th day, we have a 100% chance for gold miners to climb higher between 2.7% to 5.4%. Again, the sample size is small, so it's not statistically significant. So now let's head back to the day-by-day forecast for GDXJ. So we have 1 day out, that'll be a Wednesday, and 2 days out will be a Thursday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? So we want to compare the current trend on the line graph with the trend in the past that somewhat is similar to the current trend, and as we see here on the current trend, and compare that to the trend in the past. So let's begin comparing both of them. So on the current trend, we average above the middle Bollinger Band, and then we proceeded to touch the bottom band, and towards the very end we touched the upper Bollinger Band. And now in the trend in question, this trend dates back to March 24th to June 20th, 2016. So we average above the middle Bollinger Band, proceeded to dip lower to touch the bottom band, and towards the very end we touch the upper Bollinger Band. So what we have here is 1, 2, 3 points. We also have 1, 2, 3 points, so there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly same. The model that we just examined was March 24th to June 20th, 2016. Back then GDX was up around 2.9% or say 3%, and if we head back to the day-by-day probability model, that coincides with this standard deviation of 100% chance in the next coming days between 2.7% to 5.4%. Let's examine closer on the technical performance of each model. So on the trend that we're in, we're currently 0% away from monthly high, up 36% from monthly low, and 6% from 10 simple moving average, up 8% from 20-day simple moving average, and up 11% from 50-day simple moving average. And now let's examine the trend that we just found. Back then it was just down 50 basis points from monthly high, up 34% from monthly low, up 2% from 10 simple moving average, up 8.6% from 20-day simple moving average, and up 12.5% from 50-day simple moving averages. And among the trends, there are technical similarities, and these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.